And so those days are gone forever. Also, these algorithmic stable coins gone forever. 60 billion erased. It was decentralized, so it wasn't just in the US, but all the idiot managers are gone, and that's a great thing. And I would argue that the industry is much stronger for it with the idiots gone.
Hey guys, welcome back to Library of Wealth. Today we have Shark Tank investor Kevin O'Leary, aka Mr. Wonderful, giving us his reaction to the recent collapse of FTX and why many investors are starting to panic. While he makes adjustments to his crypto portfolio, he advises retail investors to double down on large cap projects such as Bitcoin and Ethereum. O'Leary believes that especially in the crypto market, it is vital to have diversification to account for any and all economic struggles that can cause investments to not recover. He stresses the importance of being first in the current economic climate we're in now, and with the returns in crypto trading, there will be a substantial maneuvering on many projects. Let's check out this interview with Kevin O'Leary as he gives his position in the crypto market, as well as what we can expect in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
There's two risks in the market. There's the risk of owning crypto, but there's also the risk of not owning it. There's a reason Jamie Dimon is going nuts on Capitol Hill. He knows that when he is taken into competition with something like a stable coin, the fees he makes on transferring capital, on his ACH transfers and his SWIFT transfers between countries and geographies, he's going to get killed. Whatever value is now held in JP Morgan stock will get transferred to something like a Circle. So if you don't own any Circle, you're going to miss out on that transfer. That's why crypto will become the 12th sector, the S&P. That's the risk of not owning it. The number one issue around crypto right now is policy. Number two issue, policy. Number three issue, policy. And I'll tell you why I say that. I represent and am very close to the indexing markets. I do indexes for sovereign wealth, pension, hedge funds, universities, endowments, all that. Let's say you're a very oil wealthy emirate in the United Arab Emirates and you make 250 million US dollars a day. That's not uncommon. Where do you put it? You put it into the S&P, X oil stocks, X airlines, because you already own those. And so indexers like me make those indices. When I talk to those people about what they're going to do in crypto, they would love to index 1 to 3%. I ask them, well, what would you want in that? They say, we'll just do Bitcoin. It's so correlated to all projects. We'll just do 1 to 3% in Bitcoin. They don't own any yet. None, zero. For all the excitement about crypto, the real money, where 70% of the world's wealth is tied up in sovereign wealth and pension plans, owns zero crypto. If they could get their hands on it, they would buy Bitcoin, which is why it's so interesting. The Canadians have an ETF where the underlying is Bitcoin. They also have an ETF where the underlying is Ethereum. But the institutions won't buy it because their compliance departments do not allow them to own it because there's no policy in the US. So my whole investment thesis here is you go long Bitcoin and you wait, because you either have to do it after this policy, in which case you probably leaves 20 to 30% price appreciation on the table, or you go in now and you simply wait. But I'm telling you, you're not going to get past 22,000. It's going to be stuck in this range for quite a while until we get policy.
With such low earnings, O'Leary sees the dropping value in the crypto sector. He says the economic positions in Bitcoin and Ethereum are decentralized all over the world, so it's not just American investors exposed. O'Leary also discusses how the concerns of a recession are affecting global markets, not just in cryptocurrency, but in the stock and housing markets as well.
The crypto market right now is really interesting, and here's why. This is one of the first years where everybody that trades crypto knows they're going to have to report. Let's say you're trading domestically in the US. You're going to have to report your gains or losses. And let's say you're like me and you have a lot of positions on. You've got 32 plus positions. Many of them are way underwater, but I don't want to give up my exposure to crypto. So what's going on my trading desk in our operating company right now is we're looking at every single project we're involved in. We're looking at the loss we could harvest. In other words, if I'm down 70% in helium or something, maybe I take that position, go back to USDC, then trade it into Bitcoin for the next 31 days, because that's the wash period, or 60 days, depending whatever your wash period is based on what your institution compliance says or you individually have to comply to. Because if you're going to do that, you're going to get the tax loss benefit harvested in 2022 and still keep on a position in crypto. Now, here's the debate, because I just before we got on together was talking to my operating trading desk about this. There's an intrinsic assumption right now that Bitcoin is a good proxy for any crypto. It's really hard to see some project moving north of Bitcoin gains if Bitcoin's going to be stuck in a trading range of 19 to 22,000. Now, the assumption I'm making, and I'm giving you a lot of detail here because it's food for thought for everybody that's trying to make this decision over the next 6 weeks. If you're going to harvest your losses, you basically have to December 15th because things could get thin after that. I'm talking US domestic now. I'm looking at these positions every day and saying, okay, let's take off that Polygon position, or let's trade that Polygon position for the next month into Bitcoin and go through the tax period and then reposition at a new price, a new ACB average cost base, because this is the first year that everybody's worried about the IRS. The IRS didn't give a damn about this 2 years ago. Now they do. Even my own auditors, even our compliance department is saying, Kevin, what are we doing with our crypto portfolios? What's the plan? Let's go through every single position and harvest our tax losses. Now, I don't think Bitcoin is going to trade past $22,000 until we get policy, but it doesn't have to be Bitcoin policy. It has to be any policy, which gets full circle back to what I was talking about with the Stablecoin Transparency Act. Give me that policy. I want to be long Bitcoin when that hits, if it gets cleared into law, and Katie bar the doors, because institutions are going to smell the same thing. And the asset that they want, if you could pick, let's say, 4 positions, I'll tell you what they would be in my view from an institutional client. It would be Bitcoin, it would be Ethereum, it would be Polygon and USDC as a payment system. You could get full exposure to the volatility of crypto with just those 4 positions, with the stability of your payment system being USDC. And I think that's what's going to happen. You're going to see a rise in those positions almost immediately. It doesn't mean Solana's not good. It doesn't mean there's other projects you shouldn't own. But if you want just a core holding into legislation, I'd recommend those 4.
O'Leary has strengthened his multiple positions in the market while moving many assets into a more profitable structure. O'Leary believes that his strategy of having 20% of his working company's assets in crypto distributed throughout 32 different positions will pay off with massive gains in the next year. Because he believes there's no safe position in the market, many investors are just treading water. More investors are willing to make extreme speculative bets as a result of a significant shift in the direction of capital flowing into cryptocurrencies over the past 6 months. With China, Japan, and Ukraine currently having economic struggles, he sees this as a market opportunity to buy at the bottom after a 30 or 40% downdraw on the stock price. This week's crash brings a sudden reversal after weeks of relative stability for Bitcoin and Ethereum prices. Both tokens are now down more than 20% over the last week. What do you think about Kevin O'Leary's strategy in the crypto market, as well as where he predicts we will be over the next few months? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.